So welcome back. This is MJ Crypto, and in this video, I'm going to briefly show you how to run multi-time frame analysis like a pro trader. Okay, how to run multi-time frame analysis like a pro trader. So sit back, relax while you watch this video. Now, the very first thing we want to do while running our top-down analysis, or what we call multi-time frame analysis, is to actually go first to the weekly time frame if you are a cryptocurrency trader. Now, you want to go first to the weekly time frame. The reason behind this is because you want to see the overall order flow of the market. All right, you want to see the overall order flow of the market, if we are bearish or if we are bullish. All right, basically that's the reason why we do this. Now, first things first, let's plot out our key levels. I call it key levels. Some people call it support and resistance. It doesn't really matter. But let's plot out our key levels, showing the multiple touches that we may have had over time in specific areas. All right. Now, so first things first, I want to plot our key levels here. And I can see that there's one right here. I can see that there's one right here. See that there's one. Yes, let it touch as many points as it can touch. All right, I'm seeing that there's another one. Let me just take it here. There's another one somewhere around here. All right, there's another one somewhere around here. Yes, somewhere around here. Now, to make the job easier, you can just plot your line chart, and trust me, the work is going to be far easier when you do this. It's going to be far more easier for you. Okay. So yeah, we've had our key levels, and I'm just going to take this back to I'm going to take this back to candlestick chart, right? So this is perfect. Key levels right here. Now, on this weekly time frame, I also want to identify if there's actually any pattern. Any pattern. You can identify these on the daily or on the weekly. This is ARUSDT. You can see this. You can either identify this on the daily or on the weekly. But we're using the weekly time frame, so let's just let's see if we can find any pattern that is quite visible. Okay. I think I'm seeing something like a falling wedge. I'm seeing something like a falling wedge pattern right here. So absolutely, this is more like a falling wedge. And this happens to be the support that was retested. You can see how price came off here, tried to break through, but it failed. So we can identify this and say, okay, this is actually a falling wedge pattern, and the next target we should be heading for is somewhere around here. Somewhere around here, right? So we're still on the weekly. Now, let's not do everything on the weekly. Let's go back to the daily time frame or the 3 days. Now, the 3 days time frame, the daily time frame, and the weekly, they should all show you the same thing. All right, they should show you the same thing. Can you see it? It's apparently showing us the same thing. Same key touches. Look at all the touches. Look at it. It's showing us the same thing. Now let's go back to the 1 day time frame. It's apparently showing us the same thing. Now, we're not going to be entering trades based off from, let me remove all these things. We're not going to be entering our trades based off from all of these weekly time frame and all of that. No, we're not going to be doing that. Now, do you know what we're going to do? It's very clear and simple. It's very, very clear and simple. I will show you two metrics that you can use to actually get this, your range bound, your range bound area quite easily, all right? Now you can see price is trading in this range. When price has gotten back into the range again, we're now expecting a bounce from here to the upside, like what happened here. So this is what we call capitulation or recovery. All right. What we call capitulation or recovery. All right. So it's the same thing that is going to happen here again. Same thing that has just happened here again for us now. So you can see price about to do the same exact thing. But now we'll have a bigger about a bigger capitulation or recovery. But within this place here is a fake out. And yes, it's actually a fake out. What we call a false breakout. All of these things here. But anyway, this is a video for another day. I'm just going to show you how to run your top-down analysis. So now, the 1 day time frame, 3 days time frame, and the weekly time frame, they are showing us the same thing, meaning it is fractal and it is a confluence. Now, I want to go down to 4 hours. I want to go down to 4 hours. I want to look for chart patterns that indicates a continuation. You get it now? We want to look for chart patterns that indicates continuations. So now we'll be looking for continuation chart patterns. That's what we're going to be looking at right now. We're looking for continuation chart patterns. So what can we see here? 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 All I can see here is that we had a head, an inverse head and shoulders. Obviously, this is looking like a reaccumulation. For those of you who are in my session or in my trading session, you should know by now what this signifies, right? Now, okay, we've gotten a range bound somewhere around here. Gotten a range bound. Gotten another range bound. Price broke out, we had a break of structure, and price came to retest. There's an order block here. Price came to retest the order block on the weekly time frame. You see it. So now, price has done that. Guess what price is going to do next? Price is actually going towards take out this high. It's going to definitely take out this high over time. But what is the continuation pattern that we were looking for? Somewhere here. This is it. This is the key pattern we're looking for. This is the key pattern we're looking for. Now you can see clearly we had amazing inverse head and shoulders from this point here. This point here. Had another one. We had our this is the inverse head, the second shoulder, somewhere around here. And then we had a breakout. Now we have a retest. Had a retest. Just put this down a little bit. Had a retest somewhere around here. And most definitely price is going to what? Break out to the upside. Now, here's our primary concern now. Here's our primary concern. This region. put this in blue. This region is our primary concern. So this is what we want to be looking at. We want to be looking at this particular region. So what exactly is going on here? So let's scale down to 1 hour. Amazing, isn't it? I'm seeing a lot of cup and handles. First of all, let's draw our key trend line, putting across this. Really respected. I'm going to take this off now. So want to run the analysis. We have our trend line already stated here. It's very clear, very, very clear. You can see price is respecting this trend line, making consecutive highs. Now, our range bound is going to be somewhere around here. So this particular region, let me take this off now. Let me take that off. So this particular region is going to be our range bound. And you can see very, very clearly what price is doing. So if we are making consecutive highs, it means that there's momentum in the market. So eventually we'll come like so and then break this particular high. So we can call this, it's looking more like an ascending triangle. Can you see this? It's looking like an ascending triangle, which is actually a continuation pattern. So we have an ascending triangle. If you put this online, you see it clearly. You see, put this online, you're going to see. So it means momentum is building, it's building, it's building, it's building. So when we get a breakout from here, when we get a breakout from here like so, then it'll be very, very obvious that this is moving towards the upside. But now we're looking for only buys. Okay, now we're looking for only buys. Only what? Only buys. And you can see what we did here before. Had an inverse head and shoulders, and we broke out from the inverse head and shoulders. Now we are forming continuation patterns. Now, after a breakout, you should always look for continuations. That is how to trade. Okay, always look for continuation. If you don't get a continuation, you get a reversal pattern. It is most likely that's a fake out. All right, so from here, we should start looking for continuations, so on and so forth. This is looking more like cup and handle. We're going to form like so and then break out. Once we eventually break out from here, I can be taking my entries and then targeting the next key level, which was on the weekly time frame. The next key level, which is somewhere around here. You can see the gap from here from $8, $8.9 to $14, $14.9. If you are using 25x leverage, that should give you over 1,000%. All right, so basically that's how to trade. All right, like this video, subscribe, share with your friends and families. Let's make money together. Peace out. Love you all.